Hello, and welcome to episode 4 of our podcast miniseries, Model Citizens, AI Compliance for Banks and Fintech Lenders, sponsored by our friends at FairPlay. In today's episode, Kareem and I wanted to dig into the world of customer acquisition and understand how it is being reshaped thanks to large language models and AI agents. Now, obviously, LLMs unlock a lot of exciting opportunities for marketers, such as true mass personalization and more efficient compliance review and monitoring. However, they also present some significant challenges. What happens when consumers stop searching Google or visiting NerdWallet to shop for, compare, and select financial products, and instead rely on ChatGPT and Claude? What happens when AI agents automatically refinance existing customers' loans, eliminating all of the friction that has historically kept consumers with their incumbent financial services providers? These changes are already starting to happen in the market today, and Kareem and I wanted to get an on-the-ground view into how financial services marketers are responding. That's why we brought on Alana Levine, a longtime growth marketer and CRO at Fintel Connect. Alana shares a lot of insights in the episode, everything from content strategies for AI chatbots to the enduring importance of trust and credibility in financial product selection. I was furiously scribbling notes during our entire conversation, and I have a hunch that you'll want to bring a notepad and pen with you to this conversation as well. So, without further ado, let's dive in. Okay, well, Alana, thank you so much for joining us.
So excited to be here. Thanks for having me.
Of course. Yes. No, you and I actually had a conversation before this podcast where we were sort of nerding out on some of these topics. And I was like, you'd be the perfect guest for this episode. So delighted to have you on. As I mentioned in the intro, we're going to be talking about customer acquisition and marketing, which is an area that I feel like maybe doesn't get as much attention relative to other parts of the kind of lending and customer lifecycle, right? But it's obviously incredibly important. I think the thing I always think about with customer acquisition is everything else that happens with the customer sits downstream of the first interaction that you have with them, which happens when you're marketing to them and trying to acquire them as a customer. And it really kind of defines a lot of the choices that get made later on. And of course, in financial services, much like every other area we've been talking about in this series, it's incredibly subject to regulation and to compliance requirements. And of course, as the theme of this episode is all about, and this series really, it's really being reshaped by AI, and particularly by large language models and generative AI. So that's where I want to focus. And Lana, the first question that I have for you is, if I think about areas where AI, and particularly LLMs, can have like an immediate, obvious effect in customer acquisition and marketing, the biggest thing to me is content generation, right? Obviously, we call it generative AI for a reason. What it's good at is generating really good kind of personalized content at scale, right? And the thing I've been thinking a lot about is, in marketing in financial services, we would love to personalize marketing to every individual customer, like landing pages, emails, like everything. In a perfect world, we'd love to make it personalized down to the individual level. The reason we don't do that, and the reason that personalization is, I think, limited in a lot of cases, is a function of just time, right? You can't have a human being writing a landing page for every customer, or even a landing page for every like minute customer segment that you could define with your data, even though there might be sort of a lift in terms of performance if you were to do that. So I guess the first question I have is, do LLMs solve that? Is there like kind of changes in the way that brands are thinking about personalization when it comes to reaching out to customers?
Yeah, I mean, it's a great place to start. I think it's a place that everyone kind of immediately looked to for how they can optimize their efficiencies in marketing. If you think about it, personalization has been evolving and has been incrementally improving for years. So it's not like it's something new. And I think there's a lot of technologies and fintechs in this space that have really tried to solve for this. If you think about it, you have a ton of information on your existing customer base. I think banks struggle with getting access to that information and being able to use it for segmentation. I think the brands that do have access and can synthesize that and then can shove it into a model to be able to provide much more, timely, personalized recommendations where you can identify indicators in your customer behavior that inform you of, key milestones in their life when they're, having inquiries for a mortgage, or, they may have just gotten married and they're looking at life insurance and all of those things. I think, the element of personalization is about how do you create something that's going to get someone at the right time with the right message when they have a need. And so the use of Gen AI and tools that allow you to better speak to those needs at the right time. So it's more using them as predictive, using them from decisioning standpoint, and then using them from getting the right messaging in front of them, and then testing, A/B testing, what's working from a messaging standpoint, what mediums are working. All of those things are all easily scalable using Gen AI solutions. So I think it just is it's been happening, but now it's no longer an option, it's a necessity. And I think the thing to consider with it is it's still the obvious garbage in, garbage out. If you don't have access to the right data, if you don't know what to do with the data, doesn't matter what you shove into your decisioning engines, you need good quality data to allow you to then provide the right personalization.
Yeah, that makes sense to me. And just to follow up on that for one quick sec, because I can tell Kareem wants to ask a compliance question on this front too, because there's an obvious but to this. But before we get there, I think the other thing I'm curious about is, as you were saying, a lot of this is in some ways like LLMs being the final piece of the puzzle, right? But a lot of the other pieces have been assembled for a while as it relates to personalization, right? You have to have good data. You have to know things about these individual customers that allow you to personalize them down either at a segment level or down even to an individual level. Then you need to have the decisioning infrastructure and the digital infrastructure to be able to deliver those personalized messages. And it sounds like what you're saying is the last piece is now we have LLMs that can actually do the work of creating the personalized content that can be delivered. So is it right to think that this is sort of the last piece of the puzzle that's fitting in to get us to where we've always wanted to go from a personalization perspective?
I would say so. And then the last piece, even maybe beyond that, is the measurement. So making sure that whatever you are doing, you're actually able to measure what incremental value it is creating, and how it's adjusting. I just had a conversation with someone the other day about customized landing pages and how material a difference it can make. I thought it made a little bit more material difference than this other person did. But at the end of the day, understanding that and being able to really measure, is it worth even seeing all of this data if it's going to give me a 5% marginal improvement in conversion rates when someone hits my landing page, or someone sees an offer in their digital banking app? Is it worth it? Or how do I actually interpret this to then make smarter decisions on what else I should be changing to improve, how people are engaging and adopting my products?
That makes so much sense.
Yeah, Alana, I sort of have a two-parter in following up on that. So the first is does everybody love personalization? Is there a creepy factor, or does it ever feel like, hey, this is too much information about me? I'm thinking in particular about dynamic pricing, which kind of has the potential to feel unsettling. And then the second part of the question is okay, great. Let's assume personalization is, manna from heaven when it comes to marketers. It feels like one of the things that's traditionally been a bottleneck have been compliance reviews of marketing materials. And so how do you think about making sure that you're not creating compliance and UDAP risk in a world of, hyper-personalized content creation for potential customers?
Yeah. Well, those are two very juicy questions. I often ask myself about the first one, the creep factor, and it is something to consider. I think the two things I would say related to that is, one, it's an expectation setting. So I think if I'm getting personalized offers from my financial institution and I know they have certain information about me, or I have an app that I'm using to manage my finances, of course I'm going to expect they have information about me and that they can present relevant things that they can extract from my information. They know that I am shopping at Lululemon and I'm getting an offer for Lululemon, cashback incentive to use my credit card, I'm excited about that. I want to save money. And I know that they know I spend at Lululemon. So logically, it makes sense. I think if I'm getting personalized offers from a brand that has no idea who I am, and that some of the kind of battle that you have with more traditional channels like direct mail, where, I'm getting pre-qualification offers, clearly someone has gotten access to my information and I'm now eligible for a product. That's not hyper personalization, but there is, I think, some element of, clearly my information is out there in a way that people have the ability to then target me based on that information. So I think that's like this expectation setting, and then understanding that your FI, or the apps that you're using that have that information about you likely have access to that, and so therefore can offer you those personalized incentives or personalized recommendations. So I think there's benefit. And I think those that are, consumers are really savvy now. So they know that this exists. If you're getting something for free, you're the thing that's being sold. You just have to know that. So if you're not paying for it, you're the product. So that's what I would say for the first part. And then the second part on the compliance bit, Kareem, you hit on such an important point. I think having the right mechanisms in place to be able to match the scale of your marketing, you need tools that can match the scale of how you're churning out content and churning out information. And so there's tons of solutions out there that are built to kind of vet. And the way we look at marketing compliance, and I don't know if you see this the same way, is there's the pre-approval or almost like pre-screening and pre-evaluation before something gets published. And then there's the once it's published and once it's live, the monitoring, whatever's evergreen and out there in the internet. And then the last piece is kind of like the just generic listening of what's being said about my brand. Is it accurate? Do I have concerns? In our world, on the acquisition side, we mostly focus on where there's a commercial relationship. So if you have a commercial relationship and you're running a campaign with a third party, or you own the information in the ecosystem and it's you who's responsible for deploying these campaigns, or it's on the case of, a sponsor bank, your fintech partners that are responsible for deploying these campaigns, making sure that they have the right controls for before it goes live. And then once it is published, how to make sure that whatever is being presented aligns with that. It's when you're scaling and you're doing mass volume of personalization, you need tools that are going to match that, because it's not humanly possible, just as it isn't humanly possible to create great copyright and ads, customized to each partner. It's the same thing for your compliance function.
That's super interesting. It actually ties back to something that Ellie from Affirm mentioned on the last episode, which is they're using AI for exactly this purpose, which is they have all this like messaging out there about how Affirm works, and it's all very much subject to like UDAP and truth in lending and these requirements around like how you present a lending product and how you describe it. But they have thousands of partners, right, that embed Affirm's offering, and they actually built a LLM powered kind of scraper tool that can basically search for this information everywhere, to your point, and monitor how it's being used and if it's in compliance. So I do think it's kind of funny, but I think LLMs will create more of this issue, right, to your point, because we can do so much more content generation, we can be much more personalized. But it also, even if you set that aside, it can help us monitor for stuff and monitor for violations or things that have changed in a way that just wasn't scalable with human beings, right? Like you can't have humans crawling the internet and looking for all of these things. In fact, there are historical kind of incumbent firms that like the card networks have worked with for years to monitor for brand violations. And I've actually interviewed people at those companies, and it's literally like people whose job it is to look at the worst corners of the internet and look for like brand violations for the card networks. And it's like that kind of work can be scaled with LLMs and done at least as a first pass with LLMs. And by the way, that might make those human beings' lives a lot better to not have to do that work first and foremost. So it does strike me as both a potential challenge, as we've been talking about, but also an opportunity. Kareem, can I ask you a question real fast before we get to the next section? Because you mentioned something I want to just make sure we circle back on. Personalized pricing, which has been a little bit in the news just with, I think it was reported that Delta was considering personalized pricing. And I think everyone who's ever traveled or had any interactions with the airlines kind of saw like a dystopian vision in their head when they read that of like, oh my God, this is going to make everything so much worse in every way. And I guess, Kareem, I was hoping to get your take on, obviously, personalized pricing in airlines is going to be regulated and sort of thought of differently than some of these forms of personalization in financial services. But like we have risk-based pricing in financial services. We have forms of personalization that I suppose you could argue are beneficial to the company, but potentially detrimental to the consumer. How do you sort of see those aspects of personalization in financial services kind of playing themselves out?
Yeah, I worry about them because I think, we're headed for a world in which, AI models can assess your ability and willingness to pay for anything, including a financial product in real time. I was at Starbucks the other day and I was really sleepy, and it occurred to me that at that moment, if Starbucks had been like, this latte cost $20, I probably would have paid it. And so that also sort of gave rise to me thinking, well, imagine I had a tool that could spoof the barista at Starbucks so that even though I am really tired, I appeared peppy and kind of indifferent to the latte, in which case maybe my willingness to pay would be much lower. So I worry that we're headed for a kind of surveillance capitalism kind of regime where you have AIs constantly trying to assess your willingness to pay and to essentially charge you a penny less than that. And I think in reaction, you'll see a bunch of tools that are intended to spoof those AIs so that, consumers and act as kind of advocates on behalf of consumers. So I do think that one of the concerns that we see historically with risk-based pricing in financial services is that it's historically been marginalized and underserved in communities and individuals who have been most susceptible to predatory pricing. And I think that that's probably going to be an area of focus for financial regulators in this kind of next phase of AI-driven line assignment, pricing, et cetera.
No, that makes sense. And I think just to put a capper on that point, I mean, we've talked about this, and I think this will come up in future episodes that we do as well. A lot of these laws that govern this stuff were written a long time ago before they could really contemplate how some of this stuff was going to work, right? I mean, the idea that companies will be able to use computers to assess things about how you're acting in the moment that might suggest greater or less price elasticity and then adjusting pricing dynamically, like that would have blown someone's mind in the 70s, right? Like that's science fiction to them. It's science fact now, right? And so I do think you're right. And as you were talking about the sort of agents working on behalf of consumers, and like maybe that's the natural pushback is, all right, well, if the companies are going to do that, then consumers will have their own agent or bot that sort of acts on their behalf. And no, they're not tired. They're totally willing to walk away and sort of negotiates for us. Alana, that actually brings me to a question I wanted to ask you, which is that's kind of happening right now as it relates to search and product comparisons and a whole bunch of these areas, right? I mean, a lot of the existing, I guess, acquisition infrastructure in financial services and elsewhere has kind of been really built around the big companies that we all know, right? Like Google, Meta, like these, Credit Karma in financial services, like these channels where they've aggregated consumer demand, they've aggregated consumer attention, and then they are pricing out the ability to sell leads or advertisement and push, consumers to certain products. It seems likely to me, and I'm just basing this on my own personal experience using chatbots powered by large language models, seems like that's going to get really upended by LLMs. What's been your observation in that space? How's that changing consumers' shopping behaviors?
It's not going to happen. It's happening. I mean, it is everywhere now. And it's funny because I feel like it's become such a mainstream topic, but those who have been in the marketing world have been anticipating this for months, longer than that, maybe even years. As soon as these platforms started to become more ubiquitous, I think, you had the kind of first early adopters, but now, every single one of my friends is using chat to research anything really at this point. I think the interesting thing is the chats, these LLMs are still so dependent on content that exists out in the world. They're not creating anything. They're actually just synthesizing information more efficiently than what the search engines have been doing. And so I think consumer behavior is shifting, and always with acquisition, it's about being where your customers are. So historically, customers in financial services have typically gone to Google or these different third-party affiliate sites. Acquisition historically in financial services, the piece of the pie that's been the biggest is affiliate. So you mentioned, Alex, the NerdWallets, the Credit Karmas, Bankrate. 45% plus of the acquisition funnel, if not more, and we talked about this earlier, in some cases, lenders, it's 80% of their funnel is coming from these third parties. And that's because consumers, the level of trust that's required to engage with a financial product so high that these partners play such an important role for them when they're doing their research. And they want this credible kind of third party to help give them and synthesize the information in a way that otherwise would be way too hard to go and shop for. And all these different bank sites, what's the best price and where do I get the best high yield savings rate? Now consumers are going to these LLMs. And now the LLMs are very dependent on the content that's being surfaced that they can reference. And the way that they ingest content is different than the way Google has historically looked at their own algorithms for what appears to people in the search results. So the structure of the content, what's being served, depending on the structure, whether the inquiries within an LLM platform are informational seeking versus transactional seeking. All of that will change the result in what appears in the LLMs. I think financial brands are saying, hey, we need to understand how the heck we get there, and how do we make sure that we're showing up first, and how do we win, and how do we do it quickly. And there's a ton of things that we're seeing. And I was mentioning to Alex, we're doing a pretty deep dive research project at the moment, which I'm majorly nerding out on, about, testing all these different search results, depending on time of day, depending on platform, depending on type of inquiry and product. And the results that we're seeing from these different LLMs are different. So each LLM is different. The products are actually influencing what the results are, which has been super interesting to see. But I think at the end of the day, consumers now are going to these platforms, and the references of what's showing up and the FIs that are appearing are those that are mentioned on the affiliate sites. So NerdWallet is probably, for credit cards, the most referenced source in all LLMs, which was really interesting. ChatGPT, Perplexity, those LLMs platforms tend to reference affiliates more, whereas Gemini, 80% or 75% we've seen so far of the responses, the sources that they reference are actually directly the FI sites. Each platform is basically surfacing information in their own way, which then to me creates this question around trust. Can consumers actually trust what they're being served through the LLMs? And how are they actually digging deeper to understand where this information's coming from? I think they are right now. I think there's still a question mark around trust. Who knows what that looks like in 3 or 6 months?
Let's talk about your AI models for a second. They're great until they aren't. Drift, bias, validation, compliance reviews, it adds up fast. FairPlay helps you identify and correct AI blind spots before they become problems. It cuts model validation time by 80% and keeps your decisions profitable and fair, so you can make more money and do more good. Learn more at fairplay.ai. Well, so let me ask one follow-up question before, Kareem, I know you have something you want to get into on this, but the trust thing is really interesting to me, right? Because I'm not trying to kill the affiliate sites because I think they do a good job. But let's be honest, a lot of the articles that you see in like a NerdWallet or whatever, these are the best checking accounts. They're, spoiler alert, not probably the best checking accounts, right? There's a balance that all of these affiliates have to strike between trust with users and serving advertisers. And some I would argue do a better job than others, but there's always this tension that exists because that's their business model,
Totally.
right? And to a degree, I actually think consumers are, I'm trying to think of the right way to describe this. They're a little more flexible on how they think maybe about trust in this way, right? Where it's like they want someone who feels like an authority, but I don't know that consumers are like actually doing any comparisons of like, do I like Credit Karma better? Do I like NerdWallet? Like, what are their methodologies? Like, I don't know that consumers are digging into that level of detail. It's more of a vibe or a feeling. Like, I like Credit Karma. I like the way they present this information. I like the editorial style they use when they create these reviews or whatever. Like, a lot of it is more the way that humans, I think, naturally assess trust, which is like feeling, right? They base it on feelings. The thing I'm curious about is how is it that a LLM or a chatbot can establish trust with users on questions like this? Or, you know, if you were to look at like healthcare, like why would you trust asking an LLM for advice on your health? I think financial services fits right into the same category. And Alana, I'm curious to get your quick take on that because I think on the one hand, it is just sort of this faceless chatbot that's kind of strange and doesn't have the same like brand that like a Credit Karma would have. But at the same time, it can also be much more interactive and personalized and kind of feel more like a conversation and maybe feel less like you're being sold to. So like what's been your early observation about how these things capture trust specifically in this context?
Yeah, it ends up coming down, I think, to the end user, because it's a sliding scale of knowledge and how you, and it honestly, the same goes for the affiliate space or anywhere else really. It's how discerning are they wanting to be. I think to your point, Alex, at least back to the affiliate pieces, it depends on how they want to be served the information and what they find as a value, and most importantly is how factual is the information that is being presented. And sometimes it's decisioning fatigue as well. Like we had talked about how the CFPB had great intentions of launching their own kind of comparison platform for cards products, but man, let me tell you, if you serve me 1,000 options, I can't make a decision based on that.
Right.
I'm amazed at like how many ketchup options we have when we go to the grocery store. I'm like, and then my decision becomes, okay, what's the cheapest one and which is good ingredients? Those are my factors. But to that point, every consumer is going to be different. I think when they engage with the LLMs, some people, are using it for free. They don't have an account. Some of them have an account and there's a historical record and they want the LLM to learn about them and how they think about things. For me as a user, I always want to understand where they're sourcing the information and I'll challenge it. I asked it earlier a question comparing, what was I asking it to compare? I was looking at, Shopify is rolling out some interesting kind of solutions to help surface product information. I was like, why aren't the banking platforms doing that? So making API calls available to catalog product, and it made the wrong comparison. Now, I'm an educated, I consider myself, I guess, on this topic, someone educated. Maybe I'm not. But I immediately saw the result. And I'm like, I think you misunderstood my question here. And then it said, absolutely correct, and then corrected itself. So I think the trust is, anything that you're reading, whether it's an advertisement on a billboard or it's something that the LLM has surfaced to you as an answer, it's how do you probe deeper and how do you sense check and what are the primary sources that you inherently believe are trustworthy. I could go off on a tangent about the media and social platforms and like people who have voices on topics that maybe shouldn't. But it's that same kind of logic of this is a voice that you can listen to. It is a two-way street for an interaction. And how are you making those decisions internally on whether what it's presenting to you is fact-checked enough or credible enough that you can lean into what they're saying and trust it?
Alana, I have sometimes heard marketers at banks and fintechs complain about traditional digital acquisition channels like search and social
who would
and
possibly
affiliates.
Complain about
But isn't the reality that those channels are kind of reliably predictable, like in the sense that you know what you need to spend in order to get the results you're looking for, and the attribution, it seems to me, is fairly straightforward. By contrast, LLMs feel much more chaotic, right? They feel much more difficult to measure. They're prone to hallucination. How do marketers adjust to that reality?
We've been adjusting for years. It's every kind of iteration of Google's algorithm changing, Apple launching, the rollout to their iOS systems that, are preventing a default. It was an opt-in versus an opt-out to be able to be tracked. All of these things have kind of adjusted how we've had to look at attribution and measuring what's working and what's not. And so the LLMs are adding kind of another layer of complexity to that for sure, because more likely than not, we're seeing what we're calling the no-click era come into existence, where people are engaging and asking content and information. And right now, there's no real kind of call to action within those systems to direct someone somewhere. So that similar to how brands will advertise on TV and on radio, and when they're running those ads, they then can draw parallel kind of correlations on upticks in traffic. I think similarly, we're going to see the same type of kind of deductive reasoning. The two things I would say is one, how you're measuring the traffic that's coming into your site and into your product is going to change, and you have to account for the fact that a lot of what's the systems that you were used to using to measure those types of things are no longer reliable. So you can't rely on Search Console to tell you about the clicks coming to your site or what's driving traffic. We're seeing, for our own content, we're seeing spikes in impressions because these LLMs are coming into our environment, scraping our content, and we're seeing a massive drop in clicks. That doesn't mean our visibility isn't there. It just means we have to now measure the effectiveness differently. We're looking historically at what we know has performed for us, just as an example, because I'm just looking at this with the team, and how that exact measurement is no longer effective. We had one article that would drive so much intent and clicks through to our site. Now it's dried up completely. However, the traffic we're seeing direct to our site is increased, and we can draw a conclusion based on conversations, let's say our sales team are having, that was still the article that they came across, but it was a result in the LLM that they had found us. And now we're tracking that traffic through from an LLM platform. So we're kind of creating connections to how to measure what's influencing people coming into our ecosystem from these environments. So it is, people are looking at segmenting the traffic out. So putting tools like Cloudflare to be able to understand and segment, what's actually clicking through versus what are the LLMs scraping. And I think the other thing is, pivoting the approach that you're using when you're looking at acquisition. So the channels that you're choosing to kind of bring into your mix, evaluating them differently. Like, we're trying to help our clients measure the halo effect of affiliates if click traffic is down, but they're showing up in the results first. And there's tons of tools out there to measure your presence in the LLMs, like a Profound or a Peak, there's tons of them out there. And they'll tell you what's influencing your results and what you need to do to make sure that you're part of that visibility. So it's absolutely changing it. It's upending kind of how marketers are measuring success for their tactics. And at the end of the day, it's just another kind of evolution in what data do you have available and what's the best way for you to make sense of it in the context of everything else you're doing.
It's funny, the deductive reasoning term, I think, is a really good one. I always think about these things kind of generationally too, right? Where it's like, when did you enter the workforce and what was your experience doing this job? And it's kind of funny to think that like there was this golden age of digital acquisition where you actually like could prove attribution and be like, yeah, I pushed this button, a customer appeared. I pushed this button, a customer appeared. My marketing is easy. This job is really easy. And
hey,
I would
now,
imagine
I don't know about easy.
I'm just kidding. But I think it's kind of funny now that like for people who've been in marketing for even a longer period of time and didn't grow up in that era, they're probably now going like, see, this is what we used to do. We used to have to kind of assemble the breadcrumbs and sort of demonstrate attribution in more sort of indirect ways and think more creatively. So that brings me to a question I had, which is like, what are the strategies for dealing with this, right? And it's kind of a two-part question, Alana, because one is, as you've been saying, this stuff is showing up in LLMs, and there are tools to measure that. There sounds like, depending on which LLM we're talking about, they might rely more on the end company's websites versus affiliates versus, I don't know, influencers or other people who create content. Are there strategies you're seeing for like how to intentionally seed the data that you want to see in different LLMs, and like what are some examples of that? And then the second part of my question is, to what degree are we maybe seeing brands kind of take a step back and go like, this is all great, we're going to deal with LLMs and we're going to try to solve for that, but we also need to be less dependent on any one channel like search or like affiliates, and maybe we need to have a more diversified approach. Maybe we need to do, as you said, television advertising. Maybe we need to think about building a branch in a community that we really want to serve. Like how are they thinking outside of LLMs more broadly as well?
Yeah. When it comes to, those are also two very big questions. So if I forget the second one, come back to me on that.
I'll remind you.
For when it comes to measuring the LLMs, I mentioned a couple of kind of platforms. The way I look at the LLMs and how to actually use them effectively is I look at it and what can you control, what's in your locus of control, and then where are you dependent on maybe third parties to help kind of give you that boost. And so when it comes to what's in your control, one of the things that we're seeing is, I think it's honestly in some ways leveling the playing field for some of the at least legacy financial brands, new incumbent fintechs building their credibility on if they can harness and really focus on where they win and understand their own consumer and their consumer intent the best, they can then kind of reverse engineer what the content is to make sure that they're showing up. So similar to like long tail search queries in Google, and we talked about this, Alex, like back in the day, the Ask Jeeves or the Dogpile platforms, where it was it felt a lot more like I have a very specific question and I want a very specific answer. These LLMs are able to do that now, and so we have a lot of our clients at the moment are focused on kind of the newcomer audience. So new students or immigrants to the US or to Canada, and what does that look like and how do we target them? And really creating content, the answers to the LLMs that they're providing are very, again, informational versus transactional. The informational is educating on them on what they need to have available and what each brand is going to expect. And so if your content on your website, there's an FAQ page that talks about, hey, this is how we make decisions on you being eligible for our product or our non-interest bearing credit card or our whatever the product is, that's what's going to surface to say, fintechs like blah, blah, blah. These are their expectations. So when I talk about content and things that you can own, it's how do you build content that will very likely then be sourced because you've built it specifically. And some of these pages, they don't even get published on the website. They're just content that ends up living there for the LLMs at their, oh,
that's funny. Like it's a little corner of the website that the LLM sees, but the consumer never sees.
That's exactly right. Yeah. And it's not clickable. You can't get there from any other place, but the LLMs are scraping it because it's built so specifically to answer those questions. So that's one strategy where it's really easy to measure traffic upticks and scrapes, even if you don't have a tool in place. The second is when you're looking at those third parties and working with those different kind of content sites, affiliates, things like that. It's, how do you make sure that you're being part of that consideration set? And I think it comes down to product value, and understanding that while they're not driving traffic out to your site directly as much as maybe they were, that they're still having a really heavy influence on the likelihood that you're showing up in a search result on an LLM. So that's, I think, from a measurement standpoint. Your second question, I think, was diversification. Like, what does this new age look like? I was going to joke that QR codes are back because who thought COVID kind of really revived those big time? Which is an easy way to track that, a digital marketer, like in the old affiliate age, literally we put QR codes in books in a bookstore, like putting ads, back in the gambling days, like we'd have, poker for dummies and we'd like shove these things. That's what some affiliates would do. So there's so many iterations of this. I think direct mail is one for sure that we're seeing, an uptick in, and I can anticipate greater usage of because it's a physical way to be in front of your end consumer. But we're looking at, I would say, kind of twofold, at least in our world on the acquisition side, is one, how can you tap into really kind of curated, we call closed environments? So that's, I think, where Credit Karma has built an incredible moat is, they have a database and a way to connect with those people that isn't dependent on any of these other platforms. Same goes for like business to business partnerships. If you're offering a payment solution or you're offering a business corporate card that you're partnering with, the HR payroll platforms and other technologies that they have a high intent audience that directly matches yours, and where's the mutual value you can create. So those strategic partnerships, I think, is a big one. And then I think, the other thing is, ways that you can get in front of people that are different. So like we've run campaigns, for example, where we have a food delivery company that, like a HelloFresh, for example, and they have a great way to be able to segment based on geo or zip code. And so, if there's let's say a newcomer offer, we can, be able to put an interesting co-branded, mutually beneficial, get $150 off your food order with this partner. And it's a printed offer that sits in your food order box and then gets shipped. So there's so many kind of different angles on how you can get in front of your end consumer that I think we're going to see a lot more of that experimentation. And those that have already tapped into that, we're seeing huge success with. Like Rocked is a partner we work with where they own the checkout experience, and you can present an offer to someone when they're checking out, purchasing tickets or ordering food online, that, a financial offer, any type of offer can get presented. And again, highly captive audience, not dependent on a disruption from an LLM or what Google's algorithms are doing. But you're there and you have a way to segment and be able to get in front of them. I think that's really where marketers are going to win.
Alana, our focus on this episode is on acquisition, but I wanted to ask you about retention and cross-sell. So, in financial services, I think there's been an assumption that like once you acquire a customer, they'll be fairly sticky and open to cross-sell offers. Does the emergence of LLMs change that? Like, how do you retain a customer when they have an AI agent that can automatically refinance their loan with you the instant that interest rates go down?
Yeah, big time. This is going to be a big challenge. And, I think consumers are savvy and they kind of always have been, but this just takes it to a whole new level. And it really, I think in a healthy way, puts a lot of pressure on the financial institutions and the fintechs to be able to be ready and have the ability to be more offensive as opposed to defensive. I think to be honest, a lot of them are very complacent. They have their customers, they send their regular kind of marketing communications to them, and there's no real fear of them switching. Now, not only is there access to information and you have these AI agents that can tell you, hey, you can get a way better, if this is what you're paying currently and these are all your financial information, you could get a way better rate down the street. You should do that. It's also so much easier to switch. So now with all the digital enablement, the ability to just hop from one high yield savings product to another, or switch, refinance your mortgage, or, whatever the case may be, it's that much easier. So I think the FIs that can take more of an offensive strategy and leverage the data that they have internally, and get ahead of it and make sure that they can compete. Because that's the other thing, is some FIs aren't prepared to or can't compete. So it's like, what do you do then? And how else can you demonstrate the value that you create? And that's the real challenge, I think, and why we're also seeing consolidation in the space. Is it's some of the FIs just aren't built to be able to compete in the way that they need to, or their unit economics just don't work to sustain it in the way other businesses do. And I think we're going to see a continual kind of shift in how the landscape looks very heavily because of this.
Yeah, I mean, it's a great point. And just to add to that real quick, I mean, I think that you're right. Like, I've almost phrased this in the past as like, you sort of need a reason for the consumer to override the AI agent, right? Like, here's where you could save, 50 bips on your loan if you were to refinance. Do you want me to just do that for you? And you sort of need the consumer to intervene and go, no, 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 because I like these other things that I get from this financial services provider that might not be quite as like tangible, right? It might not be price. It might not even be like product features. And this is where I've also sort of made the case before that there's this weird distinction that we've historically drawn, I think, in financial services between marketing and customer service, right? So like customer service is, what can we do to help you? We want to solve your problem. And then marketing is like, hey, what can we sell you? We'd like to cross sell you this thing. And marketing was so obvious, I think, in financial services because it was a distinct thing designed to increase products per customer or hit some like goal that was kind of artificial and sort of outside of providing value to the customer. And I do wonder if in the age of LLMs, we see servicing and customer service kind of blend together with marketing from a retention perspective and go like, we just need the customer to love us and to try to choose to stay with us. Does that make sense, Alana?
Oh, 100%. And I think it's already kind of happened. I mean, years ago, as soon as people were, posting and had the ability to post product feedback or complaints in a public social platform setting, you had dedicated resources that typically were marketer or comms people that were monitoring those and then providing responses. So someone was unhappy, couldn't access their account, and they don't go to customer service. They just complain. They blast the brand on social. They have dedicated resources now that are there to kind of respond. And it's very marketing driven. So that's, I'd say, one aspect. And then, the other aspect is being able to provide the right level of content and insight. And I think customer support is an always arm. So, having them have access to the right information that they can better support and service the customers, I think it is a big thing too. So, I'll leave it at that.
Very much so. Yeah, no, I mean, I would totally agree with that. So let's wrap up. You've been very generous with your time, but before we let you go, we wanted to ask you just for some advice, right? If you were talking to a marketer at a B2C fintech company or a bank, and it sounds like you talk to these folks a lot, and you were talking to them about how to navigate the changes that LLMs are sort of introducing into this space, which, as you said, like, this is just the latest thing that's made marketers' lives slightly more complicated. Where would you tell them to start? What's kind of a good place to think about when you're thinking about just how do I navigate this?
Yeah. I would say, I think you need to start from kind of the biggest pain point maybe within the organization, and also where you know that you have resources that are available to be able to support it. Because there's the identification, and then there's the implementation, and then there's the actual usage. So understanding kind of what capacity you currently have and where's the biggest need or pain points, so you can create a kind of priority structure on where to focus your energy and efforts. And then I think there's two ways to be looking at it, which is operationally and then strategically. So operationally is, where is there areas that you can create greater efficiency or greater productivity within your teams? And then how do you make sure that there are the right controls in place? So back to the compliance piece. And that goes for all aspects, whether it's the campaign creation or it's the rollout of just different kind of marketing campaigns, or it's how you do your personalization. So I think that's the biggest thing. And then having a way to measure its impact. Because it's a resource investment, it's a cost investment to implement some of these solutions. And then the second, I think, is strategically. So it's, as you're evaluating your budgets for next year, it's how are you looking at factoring in these new tactics and channels as a way to, diversify your marketing and make sure that you're, not losing out and not missing out on opportunities. So, having, I would say, dedicated budgets and resources to content production in this area, tools that you're going to invest in that help, again, with efficiency. What partners can you work with to help build visibility in the LLM systems? We talked about this the other day, but, like fintechs like Ramp, I mean, they just raise a boatload of money, and a lot of their engineering resources, it's all AI driven. And, they're hiring for like a Reddit community manager. So going back to your point on customer support, having someone in a Reddit environment that can very organically interact with your potential customers is huge. So like those are the types of hires that you're going to start seeing. And so when you think about budget and like strategic investment in AI, it's not even just tools. It's what are the brains and the people that, again, garbage in, garbage out, the brains that know how to run this and do it well, that you're going to need to really be successful in this. So yeah, I would say like, what are your biggest pain points as a business? What operationally do you need to think about to actually execute on it? And then strategically, how do you roll it out? How do you measure it? And who are the people you need to actually manage it? And then, look at what impact it has and how do you see the influence that your marketing diversification has had on adoption of product and acquisition.
And hopefully it will have a lot. This is going to be a very exciting space to continue to watch. Alana, thank you so much for hopping on. I really enjoyed this.
It was my pleasure. Anytime to talk acquisition, you know that. So thank you so much to you and Kareem.
If you're struggling to get AI models into production fast and without compliance headaches, FairPlay can help. FairPlay helps financial firms build, test, optimize, and validate their AI models. FairPlay identifies and corrects AI blind spots, makes model validation painless, and scales governance without slowing you down. The result? Higher ROI, faster time to value, and reduced regulatory and reputational risk. Smarter AI, better decisions, more value. Learn more at fairplay.ai.